On this episode, I share with you a conversation about homeowners insurance with the great Earl Jones. Welcome, Earl, to the AskJasonGelios show. How are you?
Jason, what's up?
So I'm very excited to have you here. Not just because, we did an interview before, and then we actually shared the stage on the Ask Sharifa show, which we had so much fun there. And I like to think that we developed a friendship off of that show. So you're an insurance professional, and I wanted to throw some questions that I get from mainly first-time home buyers asking about homeowners insurance. They're going through the process of purchasing a home, they get pre-approved and all this stuff. And when I ask them, okay, have you spoken to an insurance professional? Have you asked questions about that? And they're like, wait, what? We have to have homeowners insurance? So I want to throw some questions your way. Now, before we dive into this, though, obviously I shared a little bit about you prior to coming into this interview, but can you just, in your own words, share a little bit about who you are and what you do?
Awesome. Well, I am honored to be on your show. Thank you. It's actually kind of weird where I'm the ones getting asked the questions instead of me asking the questions. But Earl Jones, I'm in Sunnyvale, California. I own an insurance agency. But what I do, besides making sure that when stuff goes south, people have options.
Right.
And then the second thing that I do, I am a huge advocate of social justice. And I'm sure if you're on my Facebook page, you will see my commentary of social justice. And then AIDS, I'm a huge AIDS life cyclist. As a matter of fact, I don't know if you guys can see this shirt, but I'm wearing an AIDS life. Let me see if I can adjust my camera. Yes. Oh, nice. Ride, love, live.
Nice.
I was supposed to do a 545-mile bike ride last year and this year, but fortunately, due to COVID, right, we didn't do that. But the primary thing is making sure that when my clients have a situation, whether it be home, auto, business, whatever, they have options. If I can't write their policy to where they have options, then I just don't write it. Okay. Why? Because I have seen with my own two eyes what happens when people have the wrong type of insurance, and they've been paying for it all this time, thinking just because it says insurance that they're covered. And that's truly, honestly, not the case. So when you asked me to answer your questions, I was like, oh, let's pray that you have good questions and that somebody, if just one person benefits, then I've done my duty. I've done my duty.
Would you agree, Earl, that many people think of insurance as an afterthought, that maybe, just maybe, they put more focus into what type of car they're going to buy versus what type of insurance they're going to have on the car? I know they do that for homes.
They do that for homes. The answer to your question is, yeah, it is thought of as an afterthought. And it should honestly be thought of as the forethought, because the law, when it comes to certain property and casualty things, right, plays into a part.
Right.
And the way that the average American consumer has been taught to buy, insurance is at the very bottom of the list. But when you deal with customers that are very wealthy, insurance is at the top of the list.
That's interesting to me.
They are at the top of the list because they are thinking about, how do I protect my wealth?
Right. That makes a lot of sense. So I want to throw some of these questions that have actually come from my homebuyer clients that I've had, over the, let's just say, course of the past year.
Okay.
I've had a lot more questions about insurance. One is, what is homeowners insurance? Like, what are the basics of homeowners insurance?
Ooh, that's a good question. So whoever asked you that question, thank you. Homeowners insurance in a nutshell, in layman's term, is an insurance policy that pays to rebuild your house in the event of a fire. That is the very basic definition in layman's terms, right? What homeowners insurance has morphed into now, it includes fire, break-ins, some policies, sudden burst of pipes, right? Some policies, sudden explosions, some policies with things falling out of the sky. Some, not all.
Right.
But the basic definition of a homeowner's insurance, if your house catches on fire, there's money there up to the policy limits to fix, repair, or replace your home.
And
That's
see,
basic.
I had no idea that insurance policies would cover break-ins too.
A home,
That's interesting to me. I
yes,
had no idea, actually.
yes, a standard homeowner's insurance policy can cover break-ins.
That's
Yes.
interesting. So, it covers fire. Are there any natural disasters that a basic homeowner's insurance policy would not cover?
Oh, ooh, that's a very good question. So the standard homeowner's insurance policy does not cover floods, earthquakes, volcanoes. Doesn't cover those.
Okay.
But now tornadoes, that's wind damage, can be covered under standard homeowners insurance policy.
Right.
But any earth movement, floods, volcanoes, not covered. Or acts of war, nuclear
Right.
bombs, ain't
Yeah.
covered.
Well, of course, if a nuclear attack
If
happens,
it's nuclear, yeah.
probably won't need it.
Mhm.
It's kind of morbid, but anyway, back on track. So, okay, do you have to have homeowners insurance on a home? Like, is it required by law? Are they going to break down your door if you don't get it, or repo your house, so to speak?
Oh my God. You see, the funny thing is, I actually started to shoot a YouTube video about this. The answer to your question is no. Homeowners insurance, unlike auto insurance, is not required by law, period. The only reason why people are required to get homeowners insurance is because they have a mortgage.
Right.
That's it. If you don't have a mortgage, you don't have to get it if you don't want to. You could save that money if you can afford to buy, if you can afford to pay for to rebuild your house or the repairs, or if you are sued due to like defamation of character or whatever comes, if your homeowner's insurance policy has liability limits, because not every homeowner's insurance policy has liability limits.
Right.
Not everyone. Oh, yes. So, if you don't want to get it, if you don't have a mortgage, you don't have to. But if you have a mortgage, right, whether it be through a major bank or private equity firm or whatever it is, they require homeowners insurance. It's part of the terms and conditions of their contract. And if you decide to let it lapse or you don't get it, then they force homeowners insurance on you. But what they get you will cost you 3, sometimes 10 times more than what you would have got on your own. And those policies that they force on you is not designed for your best interest, the homeowner, it's designed for their best interest.
Of course. So lesson learned is always keep it up. Just have it. I mean, it's not terribly expensive. I know if you have to have flood insurance, that can be a little bit more pricier, but then again, the cost to replace a home in general, I mean, even a small home, could be dramatic.
It can be totally dramatic.
Especially for the average person, absolutely. So with that said, does homeowners insurance replace the whole house if it's completely destroyed?
Ooh. So that is a very good question. And the theory out there in the world is that the homeowner's insurance would replace my house in the event of a total destroy, right? However, I got to be careful how I say this. because I'm about ready to open Pandora's box.
Right.
In order for people to get cheap prices, you got to cut the coverage to rebuild the house.
Right.
So let's give an example. Let's say that it's a standard 2,000 square foot house. And for the sake of numbers, it's a 1,000 square foot house. For the sake of numbers, the national average right now is still about $250 to rebuild a house from the ground up. So if it's 1,000 square foot times 250, what is that?
Oh, now you're putting me on the spot with math.
Oh, well, why would we put you on the spot with math when we all have, smartphones and we can just go to a calculator?
That's
So
true.
so the cost to rebuild that 1,000 square foot house at a national average of 250, it's $250,000, right? Now, in order to get a cheap policy, the person can insure that at 80% of that cost to rebuild. So a person can say, I want only to insure it for 200,000 or
Right.
80% of whatever the insurance company says it costs to rebuild. In those moments, there's not money there to rebuild the property at 100%.
Right. Because I know I'm sure there are a lot of people that think, oh, or they even joke about this, like, oh, well, if the house burns down, I'll just get a whole new house and all new updates.
No, it doesn't
They
work
really
like
have
that.
to, yeah, they really have to know what the coverage is, right? And is it going to replace all of that? It might only replace, certain things with basic
Literally.
improvements.
That is true. See, that is the reason why, in my personal opinion, right, not representing any one particular company, when it comes to homeowners insurance, because it is the largest investment that most of us will ever make, right? There has to be a standard, at the government level. There has to be,
Right.
because there are companies out here that will sell you a homeowner's insurance policy that is below the estimated replacement cost value. And there's no law that states that they can't.
Yeah.
So let's just take that house that we just said. If it costs $250,000 to rebuild, I don't have to sell you at $250,000.
Right.
Because depending on what company you are with, right?
Right.
I can manipulate what's called the replacement tool to get to whatever number I needed to get to in order to fit into whatever budget you have.
Right. Okay.
So if it's really 250, but you was told by your mortgage company that your payments can only be $90, well, at $250 a square foot, right? $250,000 to replace it. Let's say the cost of that insurance is $140 a month.
Right.
But you need to get down to 90 so that you can qualify for your debt to income ratios.
Yeah.
The only way you're going to get there is that I have to cut costs.
Right.
So now I manipulate the insurance agent has manipulated the numbers in order to get to that number.
Right.
So there's not going to be enough money there to rebuild that house unless you do it yourself. But even then, yeah. And even if you do it, then you still have to rebuild it up to code.
Right.
So a lot of people are misinformed, and a lot of people, to go back to what you just said about they're thinking their house burned down, it is not going to rebuild back up to this like super duper deluxe, like show it on, Pimp Out My House or whatever it is, from those 80 shows of MTV that you can still watch on YouTube.
Right.
No, your house is only going to be rebuilt back to what you originally told the insurance company it was.
Right.
Not a dime, not a penny more. Which opens up a whole nother box of when people buy a house and they get a house, they make updates and they don't tell the insurance company about the updates. Then they're mad when there comes time for their claim because you put in a 200 amp volt electrical panel, but you didn't call the insurance company and tell them, I only have you at 100 volts.
Yeah. Yeah. You gotta let them know.
You gotta let them know. Or you put in an in-ground pool, or you put solar panels on, or you took off the original roof, which was, three tap shingles, and you
Yeah.
put a clay tile roof on.
Yeah.
I'm not replacing the clay tile roof because you only paid for three tap shingles.
Yeah.
Because a clay roof costs more than a three tap shingle. An in-ground pool costs more than no pool.
Yeah, exactly. Oh, especially that.
Yeah,
I can imagine someone not making a phone call if you're getting an in-ground pool, but I guess that could happen, right? They just assume I have homeowners insurance.
correct. And
Um,
they assume because of the fact that some companies give what's called extended replacement cost, some don't. It's not required.
right,
It is not required. I don't have to add that to your policy if I don't want to.
right. Hmm. Are there multiple types of homeowners insurance
Oh God,
policies?
yes.
There's a
Yes.
lot. Okay.
Oh God, yes. Oh my God, yes. So let me just try to keep this simple. So there's what's called an HO1, HO2, HO3, HO4,
Hmm.
5, 6, 7, 8.
Wow.
And there's no law that states which
Right.
one I give you.
Right.
So the typical homeowners insurance policies are an HO1, 2, 3, and um, and 5. Those are for single family homes, right? So if you want cheap, you get what's called an HO1
Hmm.
or an HO2. HO3 is the pretty standard common one, right? And then HO5 is the Cadillac. It's the creme de la creme.
Okay.
Right. And those are for, newer homes that are built, right? If you can, always try to get an HO5 policy, right? Because that's going to give you the broadest coverage, the widest coverage, and the most bang, right? Provided, yes, HO5. HO3, right, is going to be better than HO2. HO2 is better than HO1.
Hmm.
So, yes. So there's different coverages. Now, the funny thing is that the insurance policy doesn't always tell you which one you got.
Right. They just kind of choose one for you, right?
Correct. Like I can issue you an HO2 and you wouldn't know the difference.
Right. But sometimes though, people command that. Like they want, listen, I need my payment to be $90 a month to qualify, and this, and that. And they just say, make it happen.
Correct. Like because people are trying to make a sale. Now, I myself have been in those situations and I've told those people, bye.
Right.
Yeah, I lost the sale. But at the same time, my grandmother's house was destroyed in a fire.
Right.
I do not take, when it comes to homeowners insurance, I do not take it lightly. Protecting a person's home as an insurance agent it's sacred because that's where the kids grow up. I mean, like I lost my childhood memories, right?
Right.
I can't go there and, after the fire. I mean, like we lost everything in that fire. And no matter how hard, and she wasn't able to rebuild because there was no insurance,
Oh,
which,
wow.
we didn't know until after the fact.
Right. I definitely think people need to do their homework and obviously meet with a professional like you to get more information, take more time to look at the insurance options versus just having it be an afterthought. Like, oh, the lender says I need homeowners insurance, so therefore, I don't know. Can you just set me up with something and
Well,
send it over?
yes, yes, exactly. So if they're buying a house, right, when they're talking to the mortgage officer, if they're financing the house, the one thing they can make sure they tell the mortgage officer for the appraisal, or when they meet with the appraiser when doing the appraisal, is to request what's called a replacement cost.
Hmm.
Yes, in the appraisal, there is a cost estimate section, and they can request of that appraiser, please tell me how much it costs to rebuild my house new. If they start with that number, they are light years ahead of any insurance agent because the appraiser in most states, especially here in California, they are licensed as contractors.
Right.
So, and they are looked at the houses in the area, and literally, that is the best number to go with. Now, if they refinance their home in the last year or so, right, and they had an appraisal done, pull out that appraisal and look to see there's a little section called new replacement cost or cost to replace. That's the number that they should be looking for to make sure that they have that much or more to replace their home. Then the second place, if they had that appraisal, then call the insurance company and go through line by line to make sure that the insurance company have the right roof, the right type of plumbing, electrical, the right type of exterior walls. Make sure that they have if they have like 3 sheds in the backyard, you want to make sure that the insurance company know you have 3 sheds. You tell me you only had 1, you didn't pay for the other 2.
Yeah.
Right? Make sure that they have the right square footage. You have to do your due diligence. I mean, the policies are not issued as much as people like to believe when they go online and make a purchase. Those policies are still touched by human hands, and people do make mistakes. They're not intentional,
Right.
but things do get messed up. And if they've made, that's on the initial buy, right? And then if they're doing their due diligence, they want to, ask about, is this an HO3 or an HO5 policy? If it's a standalone homeowners insurance policy, standalone single family house.
Right.
If it's a condo, then you're looking at an HO6 or a townhouse, right? If it's a townhouse or a condo, they need to ask their HOA, am I expected to get a studs in policy? Meaning like the HOA is going to take care of rebuilding the unit on the outside, right?
Oh, right.
Or do I need to get more like a more comprehensive policy, studs out, right? Where I'm responsible for taking care of the fixtures and all that stuff. Because a lot of people get the wrong type of condo insurance policy.
Right.
Because everybody thinks that the master HOA plan is going to cover stuff, and you'd be amazed. A lot of HOAs are massively underinsured, right? And a lot of HOAs do not cover, some HOAs policies only cover the rebuild of the condo up to the wall. Right. That's it. So they really do need to take the time to look at it, because I've seen condo policies where there was no money on the policy to rebuild the interior of the unit. But when I read the CC&R's covenant conditions and restrictions, the requirement was, the tenant, not the tenant, the property owner rebuilds the entire inside once the wall is put back.
Let's just put back. So if you have the wrong type of policy, you're in trouble. You're in trouble.
And then the other thing with condo owners is this. I don't care where they get their condo owners insurance policy from or townhouse insurance from, but a lot of them have $0 for a coverage called loss assessments. Loss assessments pays when the HOA says, we need more money to repair or to repair damage, that was covered under their master's policy. Without that on their condo townhouse policy, those people have to pay out of pocket. And they want to max that coverage out. Typically it's up to $50,000. Some companies will let them go a little bit higher, maybe 75 to 100, but they want to max out the HOA assessment portion of their policy. Max it out. It's inexpensive.
Right.
But I've had people argue with me over it to later come back and say, I wish I got it. So yes, so I hope that's
how that is.
Yeah, it's really sad. But a lot of people just think that because it says insurance that I'm covered. That is not true when it comes to homeowners insurance. Well, actually any insurance. It's just not. It's just not. I could literally sell every one of my clients an HO2, HO3 policy, and they would not know the difference.
Yeah. Well, you know what they say about assumptions.
This is true. So, yes. And last but not least, for those people that haven't refinanced their home or whatever, and they're looking to change, right? Pay somebody to come out and get an estimate of how much would it cost to rebuild your house.
Right.
Because the insurance companies, they're just the agents, the people on the phone, like we have a rebuilding tool, but it's based upon national average. So let's say here in Palo Alto, you tore down your house, you rebuilt it from the ground up. That's the number, whatever you paid to rebuild your house from the ground up, that's the number that the insurance company should be working with
Right.
in order to give you a quote on your insurance.
Interesting.
Oh, yeah, because I just had it happen to me where a person was buying a house. I ran their address through the quoting tool that we have, right?
Right.
Our quoting tool came back that the cost to rebuild the house was $397,000. I sent it over to the insurance, I sent the proof of insurance over to the mortgage company. And I said, hey, please double check this just to make sure, right? She sent me back a copy of the appraisal. The appraiser said that the cost to rebuild the house was $597,000.
Oh, that's a huge difference.
Huge difference. And
Wow.
I had put the quote on custom homes to
Right.
make sure that I insure enough for out here in the Bay Area, because literally one side of the street could literally be $1,000 a square foot. The other side of the street could literally be $500 a square foot.
Jeez.
Oh yeah, it's crazy. It's crazy. And this is Pepsi, by the way.
I have a funny story. So, back during the recession, I was on the mortgage side of things, and basically they had cut like almost all of their loan officers throughout the whole state, this major bank. And so they were trying to find a place for some of us that hung back. So I was helping out in the corporate office for this bank. And I'll never forget that this younger gentleman, had an okay sized house, but there was snow damage or something happened with his garage. It must have been in bad condition, but the roof, before, because we had a lot of snow, but it wasn't terrible, and it caved in.
Oh.
So insurance company sent him a check, but he had a mortgage. So the check came to him, of course, with his name on it, but also the lender. Well, he goes thinking, oh, I can just cash this check. And it was like, I don't know, 50 or 60 grand for that project to be fixed. It was a detached garage.
Mm-hmm.
And so he goes to the bank, and the bank grabs a check and says, okay, well, thanks, but we're going to send this up to the corporate office, and then they're going to be giving you a call. And he's like, what are you talking about? I got to get my detached garage fixed and all this other stuff. And they're like, yeah, but there's a process. You don't just get this money, okay. So the local bank called our department and said, hey, got this check. I'm going to office it to you. Okay. So we call up the guy, and the guy was mad. He's like, well, I should be able to just cash that. And we, the lender, said, well, no, because we have a loan out on this property. We need to make sure that you fix it. You need to go and hire people. You have to get at least 3 quotes from licensed builders, contractors, whomever. And, long story short, he learned a lesson that day that, you don't just get an insurance check and just, it's just yours. So we were slowly releasing some of the funds. They needed a deposit to book the job and get the stuff. Then they needed another part, so that was a good lesson for him too, because it's like, you don't just get an insurance check. Like if you have a mortgage on the home, then yeah, that's, now I don't know if it's the same way. Maybe, if it's the same way, if a homeowner owns a home, no mortgage, does the insurance company still have a process where they only issue a certain amount, or do they just give them the whole check?
If you don't own a mortgage, if there's no mortgage on the property, right? That homeowner would have just gotten a check.
That's it. Boom, done.
That's it. Boom, done. Correct.
Okay.
They just would have gotten a check.
Nice.
But it's good that your bank had a process in place.
Yeah.
Because your interest in the property is to get that property rebuilt back.
Yeah.
Right. And which brings up another point. A lot of people think that, well, if my house burns down, right, I'm just going to get a check and just sell the land. Well, that's not true.
Yeah.
If you have a mortgage, that check is made out to you and the mortgage. If there's more than one mortgage, like if a person has a home equity line of credit or a second mortgage, the check is made out to all three in most cases, right?
Right.
Oh yeah, like mm-mm.
Yeah. No,
And
I
then
thought I was gonna get that money. That's not how
no,
it works.
no, you're not gonna get that money. But where people go, but the biggest problem that I've seen is that people have made all these additions to their house or changes to their house and didn't tell the insurance company, or they have done do-it-yourself projects, didn't pull the permits,
Yeah.
and then they want they enlarge the kitchen themselves, no permits, no nothing. Oh no, we're putting that kitchen back to the small kitchen that it was. So sorry. So if you're going to be a DIY, if your county requires permits, please go get the permits. Please do it the right way, because it does come out in the wash.
That would be horrible. You're enjoying your new kitchen that you expanded, and oh, sorry, you're going back to the old kitchen.
You go back to but it happens all the time because people just, they just don't pick up the phone and call, and everybody thinks it's the insurance company's responsibility. The terms and conditions of your insurance policy, regardless if it's auto, life, whatever, they all say the same thing. If anything changes, please call us. No, it doesn't say please. It says you are required to notify us of any changes involving this, involving you and this policy.
See, so we had purchased a home, a new used home, a couple years ago, and the home came with a trampoline. And we didn't have any issues with it except for last summer, but and it was a mistake. It was something where we had my niece on there, and she's like tiny. Well, then she bumped her older sister, and she fractured her arm or something. She had to have a cast. Wasn't 100% broke, but I didn't think anything of it. I'm like, oh my gosh, they went to the ER. This is during COVID, but they went into urgent care. Then they had her go to a specialist. So they had, my sister-in-law was like, I don't know if this is true, but do you have liability insurance? It might cover that. If not, don't worry about it. But they had gotten like a bill for $600, and this was like a month or two after they got everything done. So okay, I call up my insurance company and I'm like, is that true? And oh yeah. Basically tell me what happened and this. And I'm like, oh my gosh, that's right. Because when we added our above ground pool, I let the insurance company know that we had it, and I had liability insurance just in case. But that what the trampoline was covered under it up to a certain amount without it going past the first level rep. So the first level rep said, okay, we're automatically going to issue them $1,000.
Yes, that's called medical payments to hurt to others.
Yeah, which is crazy. And I had no idea that we had that, but because we had shared that, okay, we have this above ground pool. And to me, that was a no brainer, calling the insurance agent, hey, get this pool. It was, that was covered. So that was awesome. And it didn't ding us or anything. It's just, it's an accident.
They told you what? It didn't who?
It didn't ding the rate or anything like that.
Did you hear that from an underwriter, or did you hear that from some claims person on the phone?
From the local agent. So
you might want to call that person back and get that in writing. The local agent does not get to tell you if it's deemed your coverage or not. Okay. They're not the underwriting people, and they're not the ones that make that decision. Right. Well, you have a bodily injury claim on your homeowner's insurance. You should be prepared for a rate increase for the next 6 years.
That's interesting.
Right. Now, if somebody tells you differently, then you should get that in writing on company letterhead signed.
Yeah. Oh, that's interesting. I'm gonna have to look into that. I haven't seen it go up.
Not
Uh,
yet. When did it just happened? So your policy hasn't renewed yet.
last summer.
It happened last summer.
Last summer, yeah.
Did your policy renew since then?
Yeah, it's every 6 months.
Auto insurance is every 6 months. Homeowners insurance is once a year.
Oh, so well, no, it hasn't yet.
Mhm. Yes. Now, if you were my insurance customer, I would have told you just to simply pay that out of pocket.
That's interesting. All right. Well, educating people.
Not that I'm telling you not to file a claim. I'm not saying file a
Oh,
claim.
well, I was gonna pay it out of pocket anyway, just because. But I mean, we were sitting right there, couldn't do anything about it. But
I would have just advised you just to simply write a check and just write a quick letter saying, hey, that we paid for this, we've settled this, we are released from any future liability claims. You don't, I'm not saying don't file a claim, right? But what a lot of people don't know, that every time that you call to say, because of the amount of losses that insurance companies are taking across the board, in part because of global warming, and the natural disasters that are happening a lot more frequently.
Right.
It is in some cases, in some states, some companies, not all, even if you call to say, I came home and found a puddle of water in the middle of the floor, that is a $0 claim that stays on your record for up to 6 years, depending on what state and what company you are in. I'm sorry, or with.
That's interesting.
So you literally so if
that's nice. That's nice.
if all your sister wanted to get was just reimbursement for her fees, I would have told you to write a check.
Yeah. Well, see, they weren't even asking for that. They weren't even asking. They just were like, if the insurance company, covers it, that'd be awesome. Otherwise, don't worry about it.
Oh yeah, it would have covered it, but it's not substantial.
Yeah.
So, the national average of claims is less than $5,000, but those people are paying extra premiums because of it.
Right.
So, and the way to maximize your insurance is to always carry a high deductible. So carry a deductible of $5,000 on your homeowner's insurance. Really? You will save a lot of money.
That's true.
And if the size of the damage or whatever is less than 5,000, just write a check. Because most of the stuff that people file a claim on for homeowners insurance is technically really maintenance.
Of course.
Maintenance related.
Right.
So yeah. So if you were my client, you told me, I would have said, find out how much it is. If it's less than $5,000, write a check.
Right. That's interesting.
Not that I'm not saying don't call your insurance company. I'm not saying don't file a claim.
Oh,
I'm not saying that.
It makes a lot of sense, because you don't want to be stuck. I mean, yeah, that's it. Don't call unless you have to.
I'm not saying that,
Right.
But now let's say that that the kid wind up needing $30,000 worth of medical bills.
Right.
File a claim.
Well, it's
a no-brainer.
Right.
But yeah. I'm like, nope.
Well, I definitely appreciate you sharing this information. This is huge. I hope all of you watching really benefit from this. You should be sharing this with other people, because insurance affects everybody. It really does. And so having the right education is definitely key. Earl, how can people follow you, reach you, connect with you? What's the best option to do that?
I knew you were going to ask me that question.
Of course, I will put all of your links in the description below.
That would be the best. But, if you want to follow me, I do have a YouTube channel that I'm getting better at after, talking to you and doing a few courses. I'm getting better at posting things on that. And then they can always go to my Facebook page, which is Earl L. Jones Insurance on Facebook. Nice. But literally, if you're in California, Missouri, or if you just have questions, it doesn't really matter. I'm Googleable. as I've been told. Yeah, I really do hope that your new homeowners, right, they'll just take a few minutes and do extra work. Do not, my best advice to people, do, I understand that price is important, but when it comes to your home, price or any type of insurance, price does not drive cover, price does not equal coverage.
Right.
So
you don't want to skimp out on insurance, because if something does happen, you're going to be in a world of trouble. You're going to be, it's just not going to be a good thing. So people should really, in my opinion, pay for the right coverage.
Pay for the right coverage. If it's a single family home, you want at least an HO3, HO5, and you want to be specific and ask, is this an HO3, HO5? You also want to make sure that they ask, is this a replacement cost policy for the roof, for the personal items, right, and for floors, carpet?
Nice. Yeah, because all that's expensive.
Because all that stuff is expensive. But what a lot of people don't know is that the standard policy is an HO3, HO5 actual cash value. And those policies, right, are designed to take into account depreciation. So if I buy an older house,
right,
and I buy it and 5 years go until the roof needs to be replaced. So let's say the cost of the roof in today's terms is $20,000 minus my deductible, minus depreciation.
Right. Yeah.
So I'm only getting, let's say that my deductible is $5,000, so $15,000, right? Then minus depreciation. So let's say I'm only getting $12,000 because you're not going to make up you're never going to make up the cost,
right,
to have a replacement cost value policy versus an actual cash value policy. But sometimes that's all a person can get because the house condition is so what it is. Like that's all that they can get. If they get an ACV value policy, then get the house fixed up quickly so you can get it over to an RCV, replacement cash value policy, because those are the policies that give you the better options.
Wow.
Oh, I could talk to you about homeowners insurance all day, but we both have things to do.
Yeah, well, thank you for being on the show. I'm very excited that we had this opportunity to basically share some awesome information. And I feel that people will definitely find this valuable and, really just take a deeper look into what type of insurance that they're getting. Because it's extremely important. You don't want to be, for lack of better words, screwed when something happens with a house, or just like anything that has to be insured, right? Home, auto, RV, whatever it is, you got to have the right insurance. So definitely appreciate you being on.
Thank you for having me, Jason. What's up, people in Michigan? What's up, people in Michigan, especially the folks up in, I forgot the bowling alley that I used to bowl at in Michigan. Darn. All right. Bye.
Thanks, Earl.
Thanks, everyone, for watching this episode of the Ask Jason Gelios Show. Be sure to visit the links in the description below to pick up your copy of my real estate book, Think Like a Realtor. It's a little book about buying and selling residential real estate through the eyes of a realtor. It's real-world advice, tips, whether you're a new agent in the business or you are a home buyer or even looking to sell a home. This is great advice. So I really appreciate it. If you guys visit those links, pick up your copy, and go ahead and share a review, good or bad, if you like it, if you hate it, okay? But get your copy today. Thank you.